All right. Let me see if this is on. We're on. Okay. Me and Rocco with you today on a major day. I don't know what he's smiling about. We were calling for an uptick in the VIX. You got it and more. A lot to talk about today. Bank earnings seems like it was a long time ago, but they reported it this morning. Let's see what exactly happened today. All right. Said I was going to shave for you, and I did. All right. Let's take a look at the screen here. All right, so this truly happened today, and I also have a week recap. So today, volatility soars 9%, second largest move of the past year. So this doesn't happen very often. It's actually, I think I just looked, it was the sixth biggest move of the past 2 years. So definitely panic in the market for the first time in a while. The last move, if you're wondering, was October when we got that CPI hotter than expected print. The low in the market, I said October. It was in October when we had the other biggest VIX move. The low in the market came 2 weeks later, and then we've been up ever since. Usually, to me, when the VIX has this big flush, I've been calling for 15 in VXX all along. We'll look at the charts. I wanted to see it tap its head there, have that capitulation, and come down. Kind of like your kid having a massive temper tantrum. Just don't bother him. Let it pass, and then he'll be asleep soon. Kind of that way in VXX and volatility. We'll take a look. And really, this a little bit surprised me. The pain today was in emerging markets. This was by China overnight. If you look today, and we'll look at all the charts, and I wanted to have a little bit of bifurcation in the down signals today, but they were all kind of one way. So the pain today was in emerging markets, make no doubt. China, Europe got hit heavily, and obviously there's a lot of wonder and lack of faith and conviction in heavy cuts this year globally. In addition to the Fed, gold put in a new high as well. Silver put in a new 52-week high today. So we'll look at all these charts, but that was the big thing today. It was really China. I know the VIX was up as high as I think 22% or something here when IWM was down 2.5% plus. I did some buying, probably a little bit early, but I thought the opportunity was too good to pass in some mega cap stalwarts there. And this week I put everything according to the moves. This week, I know it feels like a long one. It was all about volatility rising and large drops in South Korea and insurance. And interesting, South Korea is not really a strong performer, but all those trades are all counter trends. So big jumps in volatility, that's against trend from what we've been seeing. Short South Korea, that's against trend from what we've been seeing for the most part, although it's negative on the year. It does have not a horrible 52-week picture. And insurance, come on, this thing hit all-time highs last week. They had a scandal with Globe Life, and questions about how they're doing with rising rates. But I don't think that's an environment to flee just yet. And that was the third best trade in the market, was short that. So totally off sides on that. So all counter trend. Something you have to be aware of. If it's profit taking, if it's people, thinking that two on one side of the boat and you want to ring the register on some things that have made you money. We'll see. All right, so let's take a look at these charts. Oh man, what a day. What a day. S&P just real fast. Let me see, I'll pull this up. Just because people obviously have massive interest in the Spizzle, S&P. All right, so I'll take off some of these panels. I've gotten a few, I don't want to call them complaints, but there's too much here on the bottom. It kind of clutters up the screen. I'll fix it later. I really wanted to have these on for today. This is a good barometer. I talked about this yesterday about the momentum velocity. You were here essentially in August, okay? And the way I do it is you see this steady rise all the way from the lows of May to here in August. Runaway train, similar 3-month run. Well, we've done that for about 5 months now with no breath. This run is even deeper and more intense. The thing is, back in August, what happened? You had a 2-month flush out ultimately all the way to October, and then we got our liftoff. One of several things is going to happen the next week. It's kind of crazy because the catalyst of earnings starting today, and you got the mega caps in a couple of weeks that will probably lift the market, but we don't know about future expectations. There's support down here, obviously, down at 506. I think we are going to chop around this 515 level, give or take $7 in SPY. So that could be all the way to 524, matching your 52-week and all-time highs, or you can get a little bit lower. I would honestly say like maybe another % lower. Obviously, there's geopolitical tensions. Hopefully, cooler heads prevail, and nothing happens in Israel this weekend for many reasons. Pray for that. But oil spiked today. You saw commodities go further. People can get a little bit, nervous about putting more money into the S&P and saying, this AI story can wait a little bit. But I just don't think there's that much. One of the other scenarios I was saying was we base around 515 SPY for literally another month or so and frustrate the P out of many investors. We go down over the next 2 months to around 470. And that's where I give this market and the bull story room all the way down to 470 for a couple of reasons. That would encapsulate 3-month lows or so, which would be not the end of a trend, but definitely you have to have your guard up because the momentum is that way. And it's also the exact 50% Fibonacci retracement of the 1 year. So it would still even all that, considering the run we've had since Halloween. Like, come on, it wouldn't be that crazy. And you'd still be holding a 200-day moving average where it would stabilize, catch its breath a little bit, similar to the kind of environment you had here in October. It would scare a lot of people, though, and think to run for the exits and rotate out of different sectors. But that's my call on the market. I actually said in my Business Insider interview, we'd go to 510, I think, before the end of April. And we closed at 510. I'm good. Which was better at that, being able to monetize all into trading. That's a different gorilla. Okay, so let's go back and pull up some stuff. Yeah, today was not a super fun day. I did have losses. Kind of hard, when you don't have a ton of shorts and everything was pretty much down except volatility. Yeah, but we'll look at some of these emerging markets. Let's get involved. So let me see something. So let's go to the chart that looks ugliest here, VXX. So I've been calling for a capitulation point on this. This was a run that I have notes on that began around March 28th when we put those highs in the market, to be frank. So VXX then was 13 even. We've gotten to 1479 close. My level all along was 1490. So we got within 11 cents. Pretty crazy. And it surpassed that. It got to 15.5 today, which was scaring people. I think that's kind of it. If you look at the RSI, we've topped out here every single time, except during those scary times in the fall in September. This is pretty much as scary as it gets in the S&P 500, according to the VIX, in terms of vol expansion. It typically tops out right here, dude, right around 60, 65. Wouldn't be buying it here. Would not, personally. So that's what makes me think we just base for the next week. What happened in August, to be specific, is we based for a week, literally up, down, up, down, up. And then the next week, I think it ran up, and then we flushed all that and then some. So I think we're going to frustrate investors over the next month. The weird, really big, monkey wrench into this is earnings are starting. So you have more on Monday, I think, Goldman, all those. And then you have the Teslas. And then, of course, the big one is when Apple, Microsoft, and Google reports. And these all come in the next 2 to 3 weeks. So we'll see. But this is VXX. I would not buy it here. Overextended. I've been asking for 1490 for it to top its head to signal the end of a run. And again, March 28th is when this started to April 12th. Exactly 15 days, about 2 weeks. Typically for me, that's what it's run its cycle. Still downward sloping 200-day. I know they say don't do charts on VXX, but I was calling out for this level that began right here when we closed at 1297 that day, 1297 to 1479, a monster run. Don't see much more. This should gravitate towards, in my opinion, 1350, which would be $1.30. You'd give all this back. If you watched yesterday's video, I said the VIX, I think was, I don't remember what I was doing, but I said I was calling for about an 8% rise in the VIX. Closed up 9% today. So, all right, next, FXI. So I highlight VXX because it was the only thing that was up today in a multiple standard deviation move. Up 8%. Only thing. Now let's look at the downs. This is what moved the market lower. I know there's obviously a lot of stuff in the news, but when you look at outside standard deviation moves, it was all emerging markets, and kind of to my surprise. So FXI, it's pretty funny. I thought it was hitting its head here. I think I talked about this also this week or last, saying I wouldn't want to buy here. It's hitting its head right here at this 25 level. Not interested, and I think it's going to mean revert down to about its 21-day exponential moving average, even though that is upward sloping. So I don't want to be a crazy short aggressive on it. Down 3.5% today. Wild. I think this has, Chinese economy is crazy. They have 50% savings rate. The real estate's a mess, so people aren't saving up to buy. They're almost still living in COVID times. They're not just wasting and spending money on Teslas. So they got a problem. They can't export their way out of it so far. So they have a lot of, geopolitical tensions on their own, obviously, and all their tensions with Taiwan as well. All that being said, my target on this is, I wish I shorted it yesterday, but I wasn't super, bearish. It's funny, you're looking for shorts, sometimes they're right under your nose. My target, 23.40. So it did a lot of the heavy lifting today. So another 40 cents, maybe 1.7% downside. But yeah, this is not my sandbox. But this led the way lower today. Massive. Something I haven't looked at in a while. Emerging markets, a multiple standard deviation move, a big one here, dude. A big one, down 2.3%. That's big. This has been a positive story. Nice trends. You can see here. This thing was trading 40, I'm rounding 42 just the other day, down 2.3%. All the way, you're talking 3 days ago, for the top Bollinger Band, all the way to the bottom as of today. So that's a crazy move from 42 to a low of 40 in emerging market ETF in 2 days. So volatility is back in this one. In terms of a trade, I'd be a better buyer. Maybe if it gets to 40.25, maybe a little bit. What I was saying before, and I have a list, I thought I was going to do some trades today, and I did. When a big move like this happens, 10% or so moves in the VIX, you want things to stabilize. There's probably going to be whipsaws. So you might get a 4% down move in the VIX on Monday and up NASDAQ 1.7. It's kind of what we saw after the CPI. NASDAQ was down 1.8%, then up 1.8%, and now down 1.7. So it's a lot of give back. You got to be careful not to get chopped. I would be a better buy of this if it went down to 40 quarter, but I'm not searching for these kinds of longs right now. I think I know where I'm investing, and I'll share about that a little bit. KSA, Saudi Arabia with a huge move lower for a country ETF, 2.2. This thing was trading very well, obviously very heavily correlated with oil, but a factor, going to be a part of the story with the potential, skirmish or war this weekend. I would like to be a buyer of this. I actually have bought this in the past. This thing just was overbought. So we're talking about 2-week cycles. This thing's just been continuing to ramp up. I'm looking at a couple different charts and overlays, but definitely not a terrible place to buy here at 43.5. You might have a little bit more downside. It is correlated to oil. It's funny, this is not, off to the races, USO, gold, all that stuff. You got to wait like a couple of weeks for that to come down to your entry. This doesn't look so bad, but I'm just not going to put money at this. It doesn't look terrible. I'd want to give this like 2 weeks, and if it's still trading with a 43 handle, then I'll get in with a target of 46. But this had a multiple standard deviation move lower. It doesn't happen every day. And then Europe got shellacked today massively. I used to buy this in the past, especially since they've been having a positive year. Very, very good flows in Europe. This thing topped 2 weeks before we did in the United States. This topped on the 13th, so 15 days prior to SPY topping. So this has been consolidating a little bit longer. You look at this. This is almost like an EKG. Nice run, and then consolidate. Nice run, consolidate. Is it getting ready for another move up? I think so. This isn't the most highest velocity move. You can look at this black line, which is the 200-day moving average. It's upward sloping. It looks good. Like I said, I as an options trader, I got to go in the highest velocity areas. So I'm not going to throw money at this, but it is trading. When a superstar is closing below its lower Bollinger Band, you should take notice. This doesn't look too bad. See what happens over the weekend, of course, with the geopolitics and their reliance on Russian oil and everything, and that in terms of price of Brent. This doesn't look too bad. Money flow looks like there's large institutions have kind of exited this trade in mid-March, and that could explain some of the weakness after the peak. Doesn't look bad, though. If you didn't have a position, I might look at this next week if I'm looking for longs, but I have a long list of other stuff on my shopping list. And then very correlated to this, EFA. These guys, all I'm telling you is having what had multiple standard deviation moves lower. Like this is what moved the market today. Europe down 1.6%. A huge move. Like I said, very correlated with the chart we just saw, almost identical. Yeah, if you didn't have a position, I would consider opening one. Wait to see some of the dust settle, but I mean, this looks good to me. I would maybe wait another day or two. I think this thing could get to 81 over time. So maybe by the 79, like May or June calls, but this is a slower burn, slower move. All right, top gainers of the past 5 days. This is wild because one of these wasn't on this list. It was on the loser list, and I talked about this yesterday. I like seeing when VXX is on the top losers of the past week. It catapults from the loser list to the winner list, and it's only 2 winners this week. Volatility up 6% over the past 5 days, and yes, it did that and then some today to erase losses. And the only other one is SLV. The little engine that could just keeps going. Silver, new 52-week highs today. Gold did put in a new all-time high, and then it reversed. Same for silver. This is a nasty candle. Like, we were waiting for when this would kind of capitulate, hit its head. Similar. It really, look at the top of this wick. It hit 27.23. And then we're looking for, I need a big give back, down to about 24 handle. And then I will buy. Watch us when everyone exits this trade. But now you're not overbought. I believe RSI just under. It's trading 69.9. I'll call it 70, so still overbought. This needs a little bit more time to work off. Maybe in about 2 weeks, it's trading 24, and that would give you an entry. But I'm not playing here. Volume, by the way, it looks like it peaked in terms of longs. It peaked on April 3rd. So that's kind of what you want to see. That was 9 days ago. That's an ugly candle. That is, I think they call that a hangman. That's an ugly candle when you close below yesterday, and it's a bearish engulfing, and it captures that entire candle from yesterday. So if you've been waiting for this trade, you can be getting what you want. So only 2 trades on the week that were up in the ETF space, volatility and silver. If you had those, nice job, and volatility was just overnight. So I don't think many people would have said, oh, let me buy VXX going to JP Morgan kicking off earnings. But here we are. Like I said, CPI, JP, you can know what the prints are. You still don't know how the market's going to react, especially when this was, I hope you learned by the charts, led by emerging markets and China. So all kinds of different fear. And rates were lower today. Okay, top 5 losers of the past 5 days. No repeats from other charts. So EWI, I was actually looking at this for buying. It's a little bit risky. The reason is because I like that support right here at 62, call it 62.5. It is kind of a wall right here. It went below it for a second, barely closed above it, 62.60. I think you can get some upside in this, but the market has to participate. I have, like I said, much to my detriment, I guess, domestic bias. So I like investing in United States companies. There's just a lot more tailwinds. If you look at the big movers lower in the single stock space today, a lot of them had ADR attached. It was emerging markets. It was Azul, Ambev, Baidu, PDD. Look at all that stuff. They were lower, so like significantly. So this was really the magnet for the move. And typically, in my opinion, you buy this, and I'll tell you what I bought at the end of this. I like this. I mean, it sounds crazy because it's almost like really on its butt. This might be one of my riskier plays. I'll allocate it appropriately, like size it for max loss, and maybe do 66 calls, but you need time on this. You need to go like June's and then some. But I don't hate it. Insures, the second biggest loser of the week. So first was South Korea. This was second. This is an absolute superstar. This thing peaked just same day as the S&P, So, correlated with that, rising 200-day, a little bit more steady, a little bit more steeper, rather, incline than the others. Look at this. The RSI, we went from overbought on the 28th when it put that high to just about getting oversold. This is the most oversold it's been in the past year. So you are getting it, in fact, on its butt, on sale, discounted. I like it. I was actually looking at this, and I have on my sheet here, buy a constituent from the KIE on Monday. Might be Progressive. I think I had others, Travelers or Hartford were near the top of my list. Also looking at Ally Financial, which is consumer finance. Not exactly this, but, it's all somewhat dance to the same song. So, yeah, I am not going to hate on this. oversold, massive selling yesterday in terms of the volume. And then you have an ugly candle here, to be honest. So I want to see how the dust settles. I like this. I probably will buy an insurer on Monday. ITB, home construction. I have this on my sheet as well to buy this or XHB Monday. Let me see here. ITB. I'm just going to assume this also peaked on the 28th. Yep. So this peaked 116, trading 107 now. This you can get a bit of a velocity to the move. 21-day exponential moving average, and where it based all last week is 110. This busy area here, this bidnet, has it been more oversold than this? So this is holding up better than KIE, for example. It was uglier here when rates were just, different story back, in October. I, again, give this a day or two to settle. If I can get this at 104, I don't know if I'm going to get another $3 on this, but I think this mean reverts to 110 if the market just doesn't collapse. I don't think it does. So this looks attractive. I might buy a constituent of this on Monday. This was the third biggest loser this week. Fourth biggest loser, Mexico. This is a superstar. I made good money, good peso on this earlier in the year. I'm looking to get back in. Big loser. This just peaked 3 days ago. So also Mexico is benefiting from a lot of the problems of China. Now the United States is doing a lot more trade with Mexico. Like seeing that high just 3 days ago because it took out these highs back from February and in December. So love that. Ugly sell-off here. I think it has a little bit more to go. So I think you might have a chance to get this to 66. So I will wait. I had a bad week, so it's coming your way. Be patient. And then retail, ugly week. Abercrombie & Fitch is my holding. Still up nicely on the position. I've been in it since last year. This is going below its Bollinger Band here. This looks pretty low. It doesn't trade much worse than this. It's gotten this low in terms of RSI 1, 2, 3, 4 times in the past year. So you're getting almost like a quarterly chance to grab this. This peaked on April 1st, on April Fool's Day, at 79. A quick 10% drawdown. 4% of which was just this past week, Friday to Friday bell. Give it a day or two. If I can get in this at 73, I might either diagonalize a call spread trade in Abercrombie & Fitch or get into Gap stores. Have to see when they report earnings. The retailers usually report later in the cycle, so probably like May or something. I'm not sure. But I have an ultimate target still in this around 78, so you can make a lot of nice upside on that. So best trades. Oh, and what I bought today. So I bought XLK. I did want to act on this, and I will tell you the exact trade. So XLK, I'll just talk about why. I got a buy signal on this yesterday after that whole give back from the NASDAQ after CPI and all that. You can see how it just holds the line here right around that 207. And this thing peaked also it was March 8th. So this peaked a little bit concerning. That's what people say about tech. It hasn't looked amazing for the past, month. And this is exactly what they're talking about. This is the tech ETF. Very heavy Microsoft and Apple, 40% weighting and 10% Broadcom. Microsoft still shooting the lights out, doing great. Apple, essentially dead money. Started to get a lift this week and specifically the past 2 days. I think it was even up today because of their announcements and getting, AI-specific chips and all that. And they got their announcements on June 10th on what they're doing in AI. And that's possibly a reason why, investors have a flock to it. Irregardless, like this one, beautiful velocity on the 200-day moving average, still rising. I got a data provider giving me a reversal buy. It is losing to the S&P in terms of just return from March 25th. So I don't love to see that. S&P is basically meaning the S&P is doing better from March 25th till today, but that's a small sample size. This thing's been kicking butt for a year. Oh, yeah, the exact trade I did. So I bought the May 10th 210 calls for $3. Actually, I don't think I executed that price. I think I got in lower than that because the market's selling off. So I got in that trade. I think it was around 290. Maybe I'll put the details in the post. And then I sold next week's 215 calls against it. I think that's what I did. I might have sold the 210s because things moved. I'll type it out. But basically, I want, obviously, tech to get back to its winning ways. It's essentially, to me, basing is a superstar. This doesn't really give up the ghost by much, the 50 RSI. It did it back here last fall and last summer. This isn't that environment. And in terms of stochastic momentum mix, yeah, I think it's a buy. If I wasn't going to buy today, I was going to buy Tuesday or Monday or Tuesday. And the other things. So I told you what else I was going to do. Possibly buy Ally. I'm going to buy an Insure on Monday, very likely, unless they tank again and wait for the ball to come to you. Sell Nat Gas, very likely. I was close to doing it to today. I was going to wait on Monday. I might, again, gotta see what happens in the market. I might buy VXX put spreads, not sure, just because I don't think it's going more than 15. I will likely buy a home builder or a home construction name. Also looking at Japan, the XLC ETF, which is basically Meta and Google. Google hit an all-time high today. I think it was today or yesterday, and nobody even mentioned it. So it's not just gold. There are pockets of strength. It did reverse and close lower, I believe, but it made an all-time high. Actually, just let me check that because it's bothering me now. Yep, all-time high. I'm sorry, it was yesterday. All-time high Google yesterday. So there's other names, and this thing was in the crapper because everyone thought like Gemini was racist, having like Asian popes or something, or not Asian girls with no white guys, and Mark Zuckerberg's married to an Asian girl. Bizarre. Oh, how bizarre. And also, last one, I might buy PAVE, the infrastructure ETF. AI, excuse me, runs 10 times more energy than when you do a Google search. There's all kinds of infrastructure needs. Larry Fink, CEO of BlackRock, was talking about this today. We're going to have to beef up our infrastructure, and the chart looks great. So that is all. Go have fun this weekend. I'll be in the city tomorrow for a trading event, actually. So maybe I'll see you out there. And then, yeah, we'll see what happens this weekend. Pray for peace, always. Bye-bye. Rocco, say bye to these people.